I've noticed a subtle change in what people are saying. They still say I've got it wrong, and they say it's not 5 minutes to midnight now, it's 2 minutes to midnight. So I think what has changed, we've been talking about this reset situation where currencies, global currencies, have to reset, and basically when you have a reset, it basically means a lot of people who've got the fiat exposure suddenly find they can't use it, can't deploy it, because there's something different. There's a new type of system. What they had in cash or money in the bank or bonds isn't what they thought it was. It doesn't buy what because they now have to use something different. So that is getting closer, and when it happens, there won't be much of a warning. It'll be one of those things which comes very, very fast in an unexpected situation.
Hello everyone and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and before I announce my guest, just a reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy, sell any shares, products or services. Always do your due diligence and consult with your financial advisor. And my guest today is a retired private banker and a wealth manager with almost 50 years career in wealth management industry, primarily based in Switzerland, Mr. Clive Thompson. Welcome back. It is great to have you.
Lucian, thank you very much for having me back on your show. I'm happy to talk about whatever you want on the financial side.
Yeah, we have a lot of things to discuss over here today. Time flies. It has been almost 6 months since you were in my show, so I really look forward to hear your thoughts on a variety of things. But let's start with the economy. With persistent inflation and central bank tightening, are we on the brink of a global economic collapse, or is the talk of a recession just something to distract from structural flaws in the system? What's your take?
Apart from the start of World War III, I don't think we've got much going on really. But as far as recessions are concerned, recessions have always been predicted. I mean, I think about 27 of the last 4 recessions have been predicted. In other words, we don't get a lot, even though they're predicted all the time. And right now, the economic situation looks like we should be having one, because unemployment is starting to go up a little bit. Prices are going up. So, and of course, the Federal Reserve is keeping interest rates quite high at the moment. I think they will reduce soon. In my opinion, we are going to go into a recession, but I have to keep my my options open, because it's all too easy to predict a recession, which actually never happens. And the same thing for bear markets. People are always predicting there's a bear market just around the corner. Sometimes it comes along. We nearly had one a month or two ago when the tariffs discussion started. It went down, I think, 19%, and then rebounded very, very fast on the stock markets. Now we're sort of not far away from the all-time highs. I know we came off a couple of days ago with the Israel-Iran situation, but it doesn't look at the moment like stock markets want to go down.
Exactly. Clive, with global debt soaring and trust in institutions eroding, are we witnessing the slow motion death of fiat currencies? If so, what's the tipping point for a new financial order?
Absolutely, definitely witnessing the slow motion end of the fiat currency system. Now, for the last 2 or 3 years, I've been saying I think we're at 5 minutes to midnight when it comes to the fiat currency system. And people say, well, what are you talking about, Clive? I say, well, maybe 2027, maybe 2025, maybe 2030. But I think we're pretty close to the end. But I had a lot of people would then sort of laugh at me and say, you got it wrong, Clive. It's, the thing's going to carry on. They'll just inflate their way out of the problem and everything will be the same. But I've noticed a subtle change in what people are saying. They still say I've got it wrong, and they say it's not 5 minutes to midnight now, it's 2 minutes to midnight. So I think what has changed, we've been talking about this reset situation where global currencies have to reset, and basically when you have a reset, it basically means a lot of people who've got the fiat exposure suddenly find they can't use it, can't deploy it because there's something different. There's a new type of system. What they had in cash or money in the bank or bonds isn't what they thought it was. It doesn't buy what because they now have to use something different. So that is getting closer, and when it happens, there won't be much of a warning. It'll be one of those things which comes very, very fast in an unexpected situation. It could be a war starting. It could be a geopolitical situation. It could be an internal political situation. It could be civil war. It could be a natural disaster. It could be just a panic in the financial markets where the bond prices are plunging and the Federal Reserve and the Bank of England and the Bank of Japan doesn't provide the help they're supposed to. We don't know exactly how it could end, but we might suddenly wake up one day and find the banks are closed, just as happened in February 1933. There was no warning that the banks were going to close then, but of course, once they closed and reopened 2 weeks later, people then knew the writing was on the wall. And what followed was a month or two later, they then said, "Okay, everybody, you hand in your gold." And those who handed in their gold then found themselves gypped out of $15 an ounce when a year later, nearly, they raised the price from $20 to $35. So, everyone who handed their gold, it was rather disappointed, because if you still illegally held onto your gold, you could have taken it down to a jewelry shop who would have chucked the gold coin in with the bracelets and things and probably given you a bit more than $20 that was on the face of it. Obviously it wasn't completely illegal to do that, but people could have had a lot more just before that currency reset if they hung on to it. So what's happening? It's going to come, but we don't know when. It'll be an unexpected situation, and when you know it's coming, it will be too late to buy any gold or silver or anything.
That's a good point, and you are 100% right over here. Let's include BRICS factor in this. As BRICS nations accelerate de-dollarization, is the US dollar dominance really genuinely at risk, or is this geopolitical posturing overblown? What is the real endgame here, Clive?
So, the dollar's dominance carries on, but it is a bit like a giant supertanker in the ocean. It's very hard to turn it around, but other nations are building their supertankers in their own way, and that's going to take. It's not going to happen overnight. It's going to take some years, and even when it happens, it still won't change the fact that oil and so forth is going to be quoted in dollars. They might say, "Oh, we should quote it in renminbi, or perhaps the new gold-backed BRICS currency, or whatever they decide to bring in." What I think will happen over time is that at some point, and we're a long way from that, a new BRICS-backed central bank will be formed. We'll call it the BRICS Central Bank. It might be headquartered in Switzerland, it might be headquartered somewhere else like Singapore, I don't know where. And that BRICS Bank will probably hold a certain amount of gold deposited by each BRICS member. And in return, each BRICS member will receive a certain amount of a global BRICS currency. And that BRICS currency will potentially be convertible at the central bank back into gold. But the nations won't trade in gold, they'll trade between themselves in the BRICS currency. And if there's a trade imbalance, then unless it's corrected, potentially the nation which has got the surplus funds will be able to, in some way, shape or form, ask for that to be changed in gold if they wish to do so. And things will start to balance out again, just as they did while we were on the gold standard. Trade imbalances were sorted out in a certain way. Either a currency would devalue, but of course, if you've got your currency, if the currency is the BRICS currency, that's not going to be the currency of any one nation. And if it's convertible to gold, it won't devalue.
Yeah, let's move to hard topics and actually continue this topic. If sanctions and trade wars fracture global supply chains further, could we see a return to mercantilism where nations hoard hard assets? How should investors play this shift, if that happens, of course?
Well, I think we've seen record purchases of gold by the central banks in the last 2 years. And I think they're probably, we don't have the numbers yet, it's too early in the year, but I think they're probably accelerating that this year. And we're not talking about the European central banks, we're talking more the central banks which, let's say, are not the super friends of the United States. One central bank which is rumoured to have a lot of gold, but says they don't have much, it's only about 5% of the 6% of the reserves, is China, which is it's a very low percentage officially, but unofficially it might be a lot more. I think all central banks know that if there's some sort of new system forced on us by a failure of the dollar, panic in the dollar, then those who've got the most gold will have the loudest voice at any new system which gets developed. So I think nations are trying to build up their gold holdings, and that's partly a hedge against having all their assets in a currency which is showing, well, where the government is so far showing no signs of reining in the debt. I mean, everyone can see the projections from the Congressional Budget Office, which is part of the US government effectively, in which they forecast that the debt to GDP ratio will continue to rise. That means the debt is rising faster than the economy. To put that in a family context, it's a bit like your credit card debt getting bigger and bigger at a much faster rate than your salary is growing. In other words, your ability to service it is declining. And that's what's going on with the United States, according to the official forecasts. And there are a number of things happening which could make that worse than forecast.
Yeah, let's separate here central banks and the retail. Central banks are hoarding gold, yet the retail investors are hesitant, I believe. So is this a sign of elite insiders preparing for a systematic reset while the public is kept in the dark? Would you qualify that?
I don't know if the public are kept in the dark. I think they're not listening. I think that's the reality. I meet a lot of people, but I also get a lot of communications coming in via LinkedIn about investment matters. Now, I'd say the people who are communicating with me on LinkedIn are mostly fairly smart people, and they are talking about gold, and the questions are like, how much would you hold, or where would you buy it, and that sort of thing. Whereas the people I meet outside of in the street, and I meet a lot of people every day because I take my little boy to school, and I meet the fathers and mothers who are there. For the most part, they don't really know. They don't really care. They couldn't tell you the price of gold. They couldn't tell you the price of silver. They don't have any. And it's not a topic of interest. Of course, the stock market is, because I live in Switzerland, there's almost nobody who doesn't have exposure to the stock market. And everybody's got some shares. It's just the way it is here. But you sort of try and move them over to the gold. They don't know how to buy it. They don't have any. They're not really interested at the moment. So I think that's not yet happened for the public at large. They're still looking at the stock market, and every dip, as they see it, is an opportunity to buy more stocks.
Yeah, let's listen to the other side of the story, the criticism about hard assets. Hard assets are often pitched as a hedge, but in a world of tokenized real estate and digital commodities, some say, or some ask a question, are the physical assets like gold and silver becoming obsolete relics for nostalgic investors? What would you say to them?
No, I don't think so. I think gold always had a place in portfolios, although for many, many decades, a couple of decades, it was almost zero. But I think it's coming back. I've seen a number of banks write to me and say, we're now moving gold into our preferred asset class, or we think the gold price will be higher. I see forecasts sort of moving towards the $4,000 mark. They're usually quite cautious, usually at any point in time forecasting $100 or $200 above the current price. But there's a few out there who are looking at $4,000 this year as a possibility. Of course, if the gold price does rise, they'll raise their forecast. But the important point is they are now writing about it when they weren't 2 years ago, a year ago. And they're writing about it because they want to encourage their clients to have some gold. And we're talking about exposure of 1 to 5%, as opposed to having 0% gold. I mean, I can think of one very large bank here in Switzerland where if I spoke to the wealth managers who work there, the investment managers, and you said the word gold, they said, you should have 0 in gold. Why should you have 0? Well, pays no interest, it's going nowhere, it's a pet rock. Well, they're changing their tune, and that's officially changing the tune. Now you should have some. And why should you have one? Well, the reason they say is it's an alternative to the fixed income portfolio, or fixed income part of the portfolio, because it's likely to outperform the government bonds, for example, because government bonds are going to face a crisis down the line because the need to borrow is growing faster and faster, and salaries and incomes is not growing fast enough to create that. So we're going to have less people being expected to buy more bonds, and that means the price has to go down.
Right. Clive, silver. Let's touch on silver a bit. Silver industrial demand is surging, but its price lags behind gold. Okay, it has moved recently, finally broke this 35 level. So is the market deliberately suppressing silver to keep green tech costs low, or is it simply undervalued due to an investor ignorance or something else? Give me some color on that.
At the moment, the supply of silver coming out of the silver mines is declining, and the demand for silver for industrial use, in particular the electronics industry, is rising. About 2 or 3 years ago, there was a crossover between the supply and demand such that we went into deficit silver. So the difference between the two is now being supplied. The shortage of silver is now being supplied by recycling. And if you want to continue to, and that deficit in silver is going to continue to grow, basically as far out as the eye can see at the moment, because the mined silver is not likely to go up according to the projections. It's been falling for many years and it's still likely to fall. So the difference has to be supplied from somewhere, and that surplus silver has to come out of recycling. And the only way you get people to recycle their silver is through the price mechanism. Put the price up and more people sell a bit of silver. There'll be traders, there'll be people who hold silver bars, there'll be people who sell silver ETFs. Price goes up, they'll sell a bit, and the thing gets back into balance. But what if we get to a situation where people start to see silver as an interesting investment? It could go a lot higher. And I think we've seen some possible signs of that in the last week or so. We saw the price break through $35, and I put out a post within seconds of it going through the $35 mark. And I basically said, silver's just broken through 35. That was a trigger point for many traders, and it could easily go to $36. And I just look at the screen now. Oh, good heavens, we're above $37 today. So it's moved fairly fast in the last few days, and I think that it's likely to go above $40 in the coming weeks. In fact, I'm just looking at. I did an AI search on silver this morning, and let me just read you what that said. If I can find it now, I'm just looking for it.
Sure.
I'm sorry about that. It was a 30-page article from AI on it, but it should be up here. Can't lay my hands on it. But the gist of the article was the present price performance indicates that it should be moving above 40 and perhaps on the way to 45 this year, and within not too much time, a $50 is possible.
Yeah. My question about silver also, how big is the disconnect between the physical market silver and the paper market silver?
Of course, there are plenty of traders who are using the paper market, the COMEX, to trade silver. But we've seen in recent weeks unusual deliveries, or recent months, I'm talking about since the 1st of January this year, unusually high deliveries of both gold and silver, where people are rather than rolling over their contracts, they're taking delivery of the 5,000 ounce bars. These are pretty heavy things and they're worth a ton of money. So it's not mom and pop taking delivery. So someone's taking delivery, and the more delivery which is taken, the less that paper market becomes liquid for those who want to sell short. Because if they're selling short, they're only selling short because they believe they can lay their hands on silver when it comes to deliver, or they've actually got it somewhere stored away. So I think that my feeling is that the paper market is getting thinner, and that might be a reason why the silver price is rising. Of course, I have no physical evidence of how big the shorts are. There's a lot of talk about it, but nobody's actually been able to pin it down. There's no statistic you go and look at and say, oh, someone out there's counted the shorts, because these shorts, they could be bullion banks, they could be hedge funds, they could be private investors, they could be governments trying to suppress the price. But none of these figures are published by anyone. Therefore, you can't actually know when you see the trading on Comex or anywhere else how much of it is naked shorts and how much of it's covered shorts.
Yeah, definitely. What about gold-silver ratio? I don't know if you take that metric as an important metric. It's often considered as a key indicator. What does it tell to you today with the current levels between gold and silver, the ratio?
Well, historically, the ratio between gold and silver, we go back a long time ago, was something like 15, 20 times. I'll call it 17 times. 17 ounces of silver bought you an ounce of gold, or an ounce of gold bought you 17 ounces of silver. Now, very recently, a few weeks ago, ounce of gold would buy you 105 ounces of silver. What does that mean? It means either that silver is massively undervalued, or that gold is overvalued. And I take the view that gold is not overvalued. I think gold is undervalued given the growth in global debt. So I think gold undervalued. So let's just take gold at fair value, and we could have bought 105 ounces of silver. Well, if we were to get back to, let's call it 100 ounces of simplicity. If we were to get back to 20 ounces of silver, that means the silver price has to be 5 times what it is now. So you can see how far silver has to go to get back to some sort of normality. Now, I don't think there's anybody who realistically expects we're going to get back all that way back in short order, but there's a lot of room for silver to move upwards in the near term, and it could move a long way. And I don't know where the end lies, but I think we're north of $40 is where it goes.
Yeah, Clive, you often talk with the retail, with investors, with big funds, big boys, etc. So I want to hear, how are you? What is the current investor sentiment? What are you hearing and seeing? How is the retail looking at the financial markets going forward? How are the big boys looking here? What's the conclusion? How are we looking when it comes to the investor sentiment in the upcoming period, and of course at the current levels as well?
Well, I've got two sources which are in the business of gold and silver, which I look at. One is a shop which buys and sells gold, and so people do bring in their coins or their candlesticks or whatever they've got in gold or silver. It's not a pawn shop, but in England you might call it a PAW pawn shop. I don't know what you call it in America. Maybe you have the same thing. But in Switzerland they just basically buy and sell precious metals and watches and things like that. But I've been a regular buyer there, and they know that if they get stuff in and it's a decent quantity of silver, and we're talking silver here, they can pick up the phone to me, and if I like the look of it, I might come in and buy it. You know, I'm a regular customer. I'm the first person they call. What I'm hearing from them is that there's very little coming in terms of coins. I mean, they still got people selling their bracelets, which I'm not interested in, that sort of stuff. But there's very little coming in the form of silver that way, because that's what I'm saying I'm buying. Is that true? I walked in there the other day without warning and said, "What have you got?" And they said, "You know, welcome back. We'd love to sell you stuff, but this is all we've got." And they produced. At best, it was probably 20 or 30 coins at best. maybe only 15, but and I said, look, they weren't the coins I wanted anyway. But normally when I go in, they have a lot more than that to choose from. So they were out of stock. And why were they out of stock? Not because anyone else is buying it, because nobody's bringing it in at the moment. The other place is a major gold and silver dealer in Switzerland. They basically sell new stuff. And the report I got from them, it was a couple of weeks ago, was basically they were on both gold and silver. They were literally overwhelmed and they had to order 3 times their normal supply from the mints where they get their things in one. They had to make an order. They normally make 1 order a week. That particular week, when I spoke to them, they had to make 3 orders because the demand was so high, and they had to replenish their stock from the various mints. So that's on the mint side. Now, if I talk about the private investors, I'm seeing more and more people who are saying, "I'm in the market." I said, "Oh, really? What have you done?" "Well, I bought this ½ ounce of gold, or I bought this silver Britannia from England." Okay, that's good. So you spent $30, but it's their first purchase. And then I talk to them and I say, well, what you want to do is try and build up a collection of, the things you like and so forth. So some of them now are on their, they've built up half a dozen coins, but it's not a lot for most people. But what I see is there's a little bit of a trickle of people starting to move into accumulating something at home. And I think in times like this, when we're very uncertain about what's going to happen tomorrow, you've only got to look at the warning by the President of the United States that everybody should evacuate Tehran immediately. I don't know what people in Tehran are thinking, but if they've got their brains in gear, there's one thing they'll be taking with them, and that'll be any gold or silver they happen to possess.
Yeah. Clive, final question. How are you playing stock market these days? What commodities, what stocks are on your radar?
Well, first of all, I think that there are sectors which look particularly attractive. I think the mining sector across the board, but especially gold and silver, looks attractive. The reason for that is the price of gold and silver are both much higher than they were. The analyst forecasts were made some time ago, in each case, at the time the company reported its last results. Analysts tend to not stick their neck out and leapfrog each other too much. If they do leapfrog, they leapfrog a little. So for most gold and silver mining companies, we don't have any new reports which were made around the current prices. If you factor in the current prices, and I've done this using artificial intelligence to do the maths. I can do it manually, of course, but it's much, much faster using AI. You'll find that many of these companies will, next year, based on prices which are much lower than today's, be on price-earnings ratios below 10. So growth with a ratio of less than 10. That means they're going to be cheap, and they're going to be showing growth if the price stays where they are. So I don't think either if the price of gold and silver just holds where it is and doesn't go up at all, those gold and silver mining companies, in my opinion, will be looking much more attractive to investors next year than they look today. The other area to look at, I think, is companies which are net beneficiaries of artificial intelligence. And I don't mean the companies which are manufacturing it. That's a different game. What I mean is the companies who have expressly said, we are using artificial intelligence. We're ahead of the game. Give you an example, a major pharmaceutical company, one of the biggest pharmaceutical companies in the world, located in Denmark, well-known company. I don't know if I want to say the name because I don't want to be pushing stocks here. But large pharmaceutical company the other day said, we have cut the time for our clinical research reports from 50 days to 10 minutes. We've cut our staff. They didn't say cut our staff. We said the number of staff in that department used to be 50, we only need 3, thanks to AI. And it's very bad for the staff concerned, but frankly, if you don't do it, your competitors will.
Yeah, that's a good point. AI brings a lot of good stuff, but there are some traditional things that some people are not accepting. So I'm actually one of them, the old school that I believe that AI will help big, but not in every way, so to say. Clive, thank you very much for coming to the show. Always enjoying our discussions, and I look forward to host you again sometime soon.
Lucian, thank you very much for having me on the show. Thumbs up to all your viewers, and I'll be happy to answer any questions if they write to me on LinkedIn.